Hello everyone, welcome back. This is Jeff from Mysteel's Iron Ore Department, here to give you the latest on China's ferrous market. Let's dive in. China's ferrous market saw a general uptick last week amid brighter sentiment and improving downstream demand. Following the joint statement from the China-U.S. trade talks, the tariff reductions exceeded market expectations, resulting in a rapid rebound in prices at the beginning of last week. Meanwhile, downstream demand, previously subdued from the holiday, has since recovered, which, coupled with post-holiday replenishment demand, has bolstered the ferrous market. Steel market fundamentals improved, with steel inventories falling due to a drop in supply and a rise in apparent demand. Both construction steel and flat steel demand saw an uptick following the end of the Labor Day holiday, though this momentum is unlikely to continue as the market enters the traditional off-peak season. Indirect steel product exports are expected to pick up following the easing of China-U.S. trade tensions, encouraging replenishment activity among downstream buyers. However, this has also driven up prices, narrowing the price advantage of direct steel exports as a result. With current output still high, mounting supply pressure may weigh on steel fundamentals moving forward. Integrated steel mills maintain extremely high production levels, despite a marginal week-on-week decrease. While mini mills saw output continue to edge higher, overall profitability among Chinese steel mills has expanded recently, supporting both production and raw material demand. In addition, rumors around crude steel production control subsided last week. As a result, iron ore saw an upward momentum and outperformed, aided by falling portside inventories. However, coking coal and coke remained relatively weak, especially for coal, where expectations of oversupply persisted. Coking plants continued to operate at a profit, keeping production firm. With hot metal output peaking, the first round of coke price cuts, which were proposed earlier last week, is likely to be implemented soon. Sentiment gradually cooled toward the end of last week, as the U.S. confirmed that tariffs on Chinese steel, aluminum, autos, and pharmaceuticals would remain in place. After the 90-day tariff suspension period, it is unlikely that U.S. tariffs on China will return to the previous level of 145%. However, steel remains on the list of high tariff products, presenting an ongoing challenge for Chinese exporters. This, combined with an anticipated decline in domestic downstream demand during the off-peak season, will have a negative effect on the ferrous market. However, iron ore prices are expected to remain resilient in the absence of actual production cuts, though fluctuations will likely continue. Thanks for tuning in to this week's China Ferrous Market Update. We'll see you next time.